Hey guys, welcome to a new video. So, market had a bit of a pullback yesterday, quite a bit of red in the market. Wasn't too pretty. Actually, everything seeing red. The Nasdaq, the S&P 500, only the VIX going up a lovely 12%. So a lot of volatility, potentially some opportunities, and that's what I'm going to talk to you about today. Because over the last few weeks, I have been creating something, building something off the back of my fear and yield framework. Someone asked me a few weeks ago, because I built this fear and yield framework, but it's pretty much sentiment on the entire market, right? It's based on the CNN Fear and Greed Index, which, if we look at it now, is in fear. It's at a rating of 28. We're in fear. So there's potentially some opportunities, but the market's quite all over the place. So chips and semiconductors and memory stocks are all doing well, but some stocks and ETFs are doing really badly. So how do we ascertain which ones are doing well, which ones are opportunities right now? So what I've been building is based on this. So this was obviously, you want to basically be buying in extreme fear and selling a percentage of single stock ETFs when we're in extreme greed and we're in euphoria and everyone's absolutely loving the market. It's very simple kind of framework. But someone asked me, do I have this for each ETF, for like a scoring system for each of these income ETFs? And I thought about it and I started working on it. So I started, with the help of AI, of course, developing a scoring system and a formula for each of these high yield income ETFs. So that's what I'm going to present to you today. It is, of course, very risky stuff. So disclaimer, this video is not financial advice. This channel is purely based on my thoughts as I navigate my own personal investment journey. Please, please, please always do your own research. So first of all, if we just have a quick look at the core income ETFs, I've got them here. So DRMP, if you hold that is down 10%. That is crazy. So you could potentially see that as a buy the dip opportunity, depending on your thesis on memory stocks and the underlying holdings within DRMP. If you still think this is just a minor pullback and we're going to keep going further, Soxy, Chippy, the whole of the AI kind of tech memory sector really selling off quite a bit yesterday. The only thing showing a bit of strength, well, nothing in terms of those single stocks. TSII down 8%, Tesla getting hammered, AMD getting hammered, MicroStrategies continues to get slaughtered. But pretty much everything red apart from Microsoft and some of these stocks. So Meta, Netflix, these are the ones that have been getting so hammered over the last, year. Year. Look, this is a yearly chart for Meta and we're down here. So potentially a good opportunity. But what I want to go through is this opportunity scorecard that I've been creating, that I've been building. So I've called it the Yield and Chill single stock opportunity score. I do have one for the basket income ETF, so like your Chippies, your Soxies, your Bloxes, but still just developing a little bit. So for this video, I'm just going to be focusing on the single stock ETFs, so like your AMDWs, your METWs, all those sorts of things. NVII, those kind of ETFs. But I'll take you through how it works, because it's taken me a few weeks to kind of create this formula and build it out and make sure that it's kind of working well. It's taken actually quite a lot of time. But anyway, I'll talk about how the scoring works. So basically, every single income ETF gets a score which is based on these four components. Now, this is what it's comprised of. So 100% split into four components. So 40% of the score is based on relative drawdown. So how badly an ETF has been beaten down. So measures how unusually beaten down an ETF is relative to its own historical trading behavior. A larger relative drawdown generally increases the opportunity score. So for instance, if you think about something that might have a high score right now, MSTW, PLTW, Palantir has been absolutely getting hammered recently. So relative drawdown is very high for PLTW, so they might score very highly. Recovery potential, this is 30% allocation of the overall score. So measures the potential upside if the underlying stock recovers from current levels. More recovery runway generally increases the opportunity score. So does MicroStrategy, for example, have a strong recovery runway? Does Palantir, does Meta, does Amazon? Like a lot of these underlying stocks of these ETFs are quite beaten down. So, but what is the recovery potential for them to go back up to all-time highs? RSI, so obviously momentum, measures short-term momentum and oversold conditions. We're using the standard 14-day RSI. So lower RSI values generally increase the opportunity score. So something with a really low RSI, it could be like a Palantir. Whereas on the other side, okay, AMDW had a really bad day today, but AMDW would probably have quite a high RSI apart from yesterday's trading session. And so it would score quite badly in this because, there's not as much opportunity in that. It's had lots of momentum running into where we are now. And then finally, 10% weighting of the score is the fear and greed index. So where we are now, we're in fear at a score of 28. So market sentiment overlay applied equally across all these ETFs. Extreme fear increases opportunity scores while greed reduces them. If we're in extreme greed, it's going to be a very low score. If we're in extreme fear, then it's going to be pretty much a maximum score because you want to be deploying most of your capital then. So it's kind of an overlay of that. So hopefully that makes sense. Risk is assessed separately and is not included in the opportunity score. So we have a risk rating as well. This is the risk rating framework. So this is really important because obviously if something scores highly but it's very risky, like an MSTW, you want to take that into consideration. So we have a risk rating of low, medium, medium, high, high, and extreme for all of these income ETFs. It's pretty straightforward, but low volatility, underlying stocks with more stable price behavior is going to be low. So like your Googles, your Amazons, they're probably more low. And then anything that's extremely speculative and or exceptionally volatile stocks or very high uncertainty. We don't really know what MicroStrategy is going to be doing. It's very speculative. It's very risky, so it fits in that extreme category. You've got Coinbase in high, Uber and Netflix in medium. Okay, so there's a risk rating to these as well. All right, now let's get into the actual scorecard, the leaderboard, and you will see hopefully everyone can see this, but there's a lot of numbers here and hopefully it's readable. But if we go to number one, fairly surprising, or not surprising maybe for some because it's massively beaten down, but it's Netflix NFLW. I've just got 17 ETFs in here. I know people will say, oh, I'm missing this ETF, but I couldn't include all of them for this version of the score card. So if I'm missing some ETFs that you really want to see in this leaderboard, let me know in the comments and I'll try and get them included for the next time that I go through this, because I think this is a really interesting opportunity to look at an opportunity leaderboard for these income ETFs, because a lot of the time we're like, okay, we're in extreme fear, but which single stock ETF should I be buying into? And I think this really pins down some of these opportunities. So let's look at Netflix. Okay, NFLW, it's got massive drawdown. It's down massively. If we go back to here, we look at Netflix. This is Netflix, is it? Yeah. So you can see NFLW, it's down absolutely massively. So it scores well in terms of drawdown. It's got good recovery potential, and it also scores well on RSI. So it's got so Netflix, the underlying or the ETF, has a low RSI at the moment, and so therefore it scores highly. It scores 18 out of 20. Recovery 26 out of 30, 33 out of 40. So all of them have the same score for the fear and greed because we're in fear. So they get 6.6 out of 10. That's just a standard score depending on what the fear and greed index is telling us. So that's kind of an overlay. So then you'll see NFLW comes out at 83.6, which is an extreme opportunity. Other standouts would be Palantir. Like Palantir has, as we just mentioned, has been beaten down a lot. If we look at PLTW, it was up at around 57. Now it's down at 1680. That is, if you look at this chart, you're like, well, that's an opportunity. And that's what the scoring system shows. It's 30 out of 40 in terms of drawdown, potentially a bit more drawdown scope there because it's not scoring as highly as like an NFLW. but it's got a recovery of 25, so high recovery score, and an RSI of 15.4. So the RSI is obviously quite low, so it scored quite highly in terms of RSI. So it gets a 77 rating, strong opportunity. Now on the right here, we've got risk rating. So you may think, okay, MSTW, it's been beaten down massively, 32. There's a strong chance it's going to recover like to the upside massively. It's got a low RSI, so it scores quite well there, but it's extremely risky. So we've got to have that. We've got to bear that in mind for these opportunities. So when we have the leaderboard, we also have the risk rating. So you could say, okay, I want one of these top 7 opportunities, but I want low to medium risk. And you go, okay, what's the winner? What's leading in terms of low risk? And you go Microsoft, MSFW, and Meta. They both had large drawdowns, both got strong potential recovery, both got decent RSI scores. They're very strong opportunities right now, Microsoft and Meta, and they're in the lower risk category. So this is, I think, a really good way. And obviously, I'm developing this as we go. This isn't perfect. If you've got any suggestions, any recommendations to enhance this, make it better, I'm sure I'll get some comments anyway. But if you do have some constructive suggestions, I would love to hear them, because I'd love to make this into a proper dashboard scoring system, opportunity scoring system that we can look at and be like, okay, what's really the best opportunity in the market for these income ETFs? And I know I've only got the single stock ones here, but of course, like I said, I'm going to do one for the basket ETFs. I'm already working on it. It might just need it needs a bit of a tweak in the formula, but I think this works really well. Like, they come out kind of where you expect. So look at what's at the bottom, AMDW. It's been rallying massively. So it only gets a drawdown of 8 because it's only just off its highs, recovery of 19 because there's not much recovery potential. There's a bit, but there's not much. RSI, obviously it's low because it's been having a massive run. We're at pretty much all-time highs for AMDW apart from yesterday's trading day. So it scores a 40.8. So it'd be on the watch list as an opportunity. It's not a screaming opportunity. And that's why I think it kind of helps with the fear and greed index. If we were in extreme fear, but AMDW is rallying massively compared to all the other ETFs, it's probably not the best single stock ETF to get into. There's other better opportunities which have been beaten down, have better recovery potential, have better RSI scores because they're low deep into RSI in their relative strength index, and of course your fear and greed overlaid. So I think this, kind of makes sense to me. It's really eye-opening in terms of what the scores come out at NFLW. I don't hold it, but I'm potentially going to get into it. I've been, and I think one thing to note with this is that this is, a basic scorecard with a formula involved with drawdown, recovery, RSI, fear and greed, but you still need to do your research. Still, please don't just treat this as like, go and invest in NFLW and MSTW now. Don't do that. Obviously, do your research. Make sure you understand the risk rating for each of these ETFs and their underlying stocks, and do your research into the underlying. So what's Netflix? What's its projections for the next year or two? What's its risks? What's its PEG ratio? Its forward PE? Maybe that's what I start to add into this. It's more maybe an extra scoring element into the underlying, maybe forward PE, PEG ratio data. I don't know, but it's a work in progress, but I think it's at a good place. I do like this formula right now, and I think it just gives a good kind of consensus of what are good opportunities in the market currently. Obviously, you've got here, it depends on your thesis on crypto and Bitcoin. MSTW and COIW are, of course, very good opportunities right now if you are risk tolerant and you believe in Bitcoin and crypto. Otherwise, Netflix, Palantir, Microsoft, Meta, Amazon, all very good opportunities. Uber, I thought that might score a little bit higher, but it's still got it's got a good drawdown. It's very strong. The RSI is bringing it down. And that's something to bear in mind is like, look, if you look at Robinhood, like who is still a very good opportunity, but it's being brought down massively by its RSI. And why is that? That's because Robinhood, who has had that big run over the past month or so. If we go to the 3 months, it's had this. And so its RSI is much higher than all of these other guys. So in the RSI column, it's scoring much lower. So that's why you need to look at every single column and be like, but I believe that Robinhood should be higher. Okay, well, the RSI is bringing it down. But if you look at drawdown and recovery, it scores very strongly. So it could potentially be higher depending on your thesis on Robinhood. It's got a low RSI score, a higher RSI than the others at the moment, which brings it down. So you've got to kind of look into it a bit further as well. But I just think it's good information to have kind of see it in a scorecard and see what the opportunities are in the market. I really like it. I've been looking for something like this. And I'm glad someone suggested to me in the comments that to kind of build, or is there a fear and greed index for each of these different income ETFs? Because I think it's just something good to have. It's great to see this and to be able to see what the opportunities are in the market. But anyway, guys, I'll leave it there. I hope that's of some value. I'd love to hear your feedback on this, whether it's constructive or not. Are there any things I should be adding to this? Are there any tweaks I can make to the formula, to the weighting, to make it better, to optimize it? Are there things that I'm not considering which you think I should be considering? Any ETFs, any big popular ETFs that I've been missing out? As I said, I'm going to hopefully do one for the basket ETFs like Chippy, like Soxy, like Blocks, like all those popular ones. And I'll do that in a separate video, hopefully next week. But for now, let me know what you think about this. I would love to hear your thoughts in the comments, and I will see you in the next video. Cheers.